Hello everyone, this is Rob McDougall from Zhang Financial here with your weekly economic update. Today is Monday, May 11th, 2026. As we always do, take a look at some of the economic data that was released last week. We'll just hit those items that were somewhat impactful or at least interesting. Last week, Tuesday, the JOLTS job opening. So this number has been dropping. You may recall, and I've mentioned it a few times, this number peaked during 2022 labor crisis. Over 12 million open jobs. It's come way in since then. However, for the month of March, ended up being very much flat with the month of February at 6.87 million open jobs. Also on Tuesday, we had the ISM Services PMI number. 50 is the demarcation line between expansion and contraction. Strongly positive, a little less than consensus. Consensus expectation was 58.3, and it came in at 53.6. Initial jobless claims. I've mentioned many weeks in a row that this number has been really low, surprisingly low, stunningly low given AI concerns and all. Last week, the number came in at 200,000, almost exactly at consensus of 199. We've also mentioned over the last several weeks, as the number has been so consistently low, we're a little surprised that consensus expectations didn't catch up with it. It did last week. So last week, Friday, the big number of the entire week, non-farm payrolls, and this was much better than expected or certainly feared. Month of April, the expectation was 73,000 new jobs created, came in at 115, very favorable. And at the same time, unemployment rate held steady, 4.3%. Also on Friday, we did have average hourly earnings now. That was a little weaker than expected. Month of March, that was up 0.3% month over month. Actually came in a positive 0.2% month over month. So inflation expectations based on last week, we've been mentioning that the 10-year break even, that's the 10-year treasury minus 10-year tips, has been creeping up certainly with the energy issues, the Iran conflict that we're in right now. Well, last week a little reprieve from that. So it had moved up to 2.48% the week before and came down 3 basis points to 2.45%. GDP expectations for this quarter, Atlanta Federal Reserve. We mentioned last week is surprisingly high, given first quarter was 2.0. Last week they were at 3.5%. They actually increased it. So now the expectation from the Atlanta Federal Reserve, second quarter GDP growth for the U.S., 3.7%. In terms of any interest rate changes coming up for the next Fed meeting, that's June 17th this year, FOMC meeting, there's an expectation certainly of virtually no change from where we're at right now. 4% chance of a cut, slightly down from last week. When we look at the end of the year, we mentioned last week, maybe the week before, the fact that the market does not have a firm grip on whether we're going to get rate decreases by the end of the year, rate increases. That has continued. So right now, roughly 74% odds at the end of the year will have no change from where we're at currently. And there is a slight skew towards the negative, towards a rate increase, 19% odds of one rate hike, but only 6% odds of one rate cut. Last thing for last week, this is probably a wrap up on first quarter earnings. So as of last week, Friday, 89% of the S&P 500 companies had reported first quarter earnings, and they were fantastic. So in total, 84% of the companies beat expectations. That's well above the 5-year average of 78% beating or the 10-year average of 76% beating. The thing that was most impressive, though, during the quarter, not just the percentage of companies that beat, it's the magnitude of beat. On average, companies beat expectations by 18.2%, way above the 5-year average of 7.3%, or the 10-year at 7.1%. So in total, again, this is the reason we always point to. Investors will ask, Iran war, geopolitical, political, how is the market staying up as high as it is or continuing to advance? This is the precise answer. So in terms of how markets reacted last week to the news that we just gave you, that was mixed to slightly positive. Certainly the employment number was great on Friday. S&P 500, another winning week last week. S&P 500 up 2.4% last week. So now on a year-to-date basis, S&P 500 positive 8.5%. In terms of the year-to-date, yes, S&P up 8.5%. As impressive, certainly. Russell 2000. Small cap stocks definitely have led the way this year. Small cap stocks or the Russell 2000 this year to date up 15.7%. Last week with the S&P 500 up roughly 2.4%. Developed markets ex-US and emerging markets both did well as well. Developed markets ex-US up 2.6%. The big winner last week, again, emerging markets up 6.9%. So we mentioned the S&P 500 on a year-to-date basis is up 8.5%. Emerging markets up 22.5% year-to-date. Lastly, in terms of returns last week, almost no real movement in the fixed income markets here in the U.S. 2-year completely flat, 10-year down 2 basis points. So a small rally in the bond market. The U.S. Aggregate Bond Index, the Bloomberg U.S. Aggregate Bond Index, up 26 basis points last week. Economic activity this week. We'll start with tomorrow, Tuesday. This will be very important. We have CPI numbers. Obviously, this will be really heavily scrutinized. So CPI coming out tomorrow. The headline number for CPI is expected to come in month-over-month increase for the month of April of 0.6%. High, no doubt, but that's actually below what we actually realized in March, which was a positive 0.9%. Now, the core inflation rate, stripping out food, energy prices, that's actually going to be higher than it was in March. In March, it was up 0.2% month over month. The expectation for April is it will be up 0.4%, 0.4. And then on Wednesday, we'll get producer prices, same metrics, headline and core number. In terms of the headline number, the expectation for April, it'll come in at a positive 0.4% month over month, which is lower than we had for the month of March, which was up 0.5%. And then core PPI, again, ex food and energy, the expectation for April is that will advance, it'll increase. It'll be up 0.3% month over month. For the month of March, that was only up 0.1%. Then on Thursday, as always, we'll get the initial jobless claims. Recall, last week it came in a very low 200,000. Expectation for this week, 205,000. Lastly, also on Thursday, retail sales ex-auto. Expectation is we'll have some cooling from the month of March. March was a very, very strong retail sales month. So for retail sales, just a headline number for the month of March, that was up 1.7%. For April, cool back down to a positive 0.6%, which is still a very strong, solid number, far below what we saw in March. Same thing for retail sales ex-auto. March, that was up 1.9% month over month. For the month of April, consensus expectations, positive 0.6%. So that's it for our economic recap. We thank you very much for attending. We'll look forward to seeing you next week. Thank you.